Okay guys, I just flicked the camera on because we're on doing gold. As you can see at the moment, this is the smaller account. What I've done at the moment is I've done what's called a partial ladder. In other words, I put a full position in and a couple of additional positions at a smaller size, laddering backwards to basically build on the surge for it to push down on itself. Now the idea of this is quite simple. You put the bulk of your order in first just to see what's going on, and then you add to it. Now, it is slightly over leveraged to where I want to be, but I've got a lot of house money to deal with so that I can just push this out that little bit further. Now, I don't really want it to go much beyond either of these two blue lines, and certainly not the purple line, which is what I'm laddering up to. Now, what I can do at this point is I can start switching positions on and off, add them back in, etc., etc. Like here, I can take that out, which is what I'm intending on doing. And then I'm just going to place the order back. If I just come back here, just drop that back up to where it came from, put it on a sell limit, boom. And then put that order back where it came from. So it ladders. It's almost like a relay race. So that one comes down to this one. This will now take over to go to there. And this one, we're just going to let run down. And if it surges and pushes down, brilliant. Now, in the meantime, what it does, it starts banking money. So we've got 129 there. Now, if I look at what I've set up for the morning, which is here, I'm looking, I can't put any bid higher than 90p in. All right, my maximum bid would be 90p. Now, this account is small. Well, it started small. Started at 200 quid. We can see that here. And we've been steadily working our way through it. These are the stats as it is now. We're now up to 900. So if I come through back here, what we are looking for are two things on a daily basis. I want this, which is the day target to achieve 10% of the starting balance, but each day I also look for an investment target. Now that investment target is 10%, and it's 10% of what I'm willing to put on the table. Well, I can take 45 quid a day onto this. Now that's my tolerance that I can use for the day. So the minimum return that I'm looking for is roughly about 450. Now, as you can see down here, if you put 30 quid on, you want to be getting £3.9, one thing and another. What does that mean? That's ROI. It's one of the cornerstones of business. It's return on investment. If I put so much down, I want so much back minimum. And that's what that's all about. But I really just look at this because that is the overall target. This is just a guide, and fantastic if we happen to achieve it. So just push that back out of the way. This is fine. So as soon as I get this kind of over 450, I'll be fine. And I can use the ladder in order to do this. And that's what we're looking at right now. Okay. So let me just run it off and I'll come back to you. Okay guys, the job's done. Spent maybe 40 minutes doing this, if that. It's currently 20 past 8 in the morning. What I've done, and I know a lot of people are going to look at this and think this is odd and it's strange and it shouldn't be done and blah blah blah. Well, tough, because I do this and I do it every day. What I'm looking at is I'm using the motion of the market in order to achieve a daily figure. That's it. Now, that's within a tight range. And it's a tight range of a couple of surges that happens pretty much every day. Now, the choice this morning was looking for the downward push surge. Now, if we look over the last 4 candles, which is the last hour, I was right to be looking at downward surges. Now, it pushed up, couldn't get any higher, then down it came. So it was working between the 2 blue lines, and the idea was just let it push up, grab, come down, let something else take it over like a relay race, and then eventually get down into the main one and just carve off as we go. Boom, 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 boom. And what happens is each time you carve, you're playing with house money. So it allows you to put the next ladder in and so forth. So you can actually build a position up based on money you're already making, which is what here is. And then eventually when it starts trucking, as soon as you get your target, take your money and now walk. And what does that walk look like? Well, if I pull this in, we'll see again. I've got 100% strike rate straight through. We've taken 15 positions and we're edging up ever so slightly each time. Boom, boom, boom. Yeah, okay. I didn't hit the investment target, but overall I did, because I was looking for 450 based off that. Well, we have done 450. We've done 639. So I've actually achieved that. It just didn't happen within a single position. So there we are. Short, surge, in, done. And we have increased, well, we've had a phenomenal start. I can actually do nothing now for the rest of the month, but I'm not. I'm just going to coast along each day, look to do a couple of quid every day to add it in. Boom, 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 boom. But this is now starting to get to a point where it's paying decent money. You know, I'll give it another month, 2 months, and we'll start generating half decent profits. This will pull probably another 200 quid for my Vanguard at the end of this month. That 200 quid every month is £2,000 added to that. That £2,000 will run for 10 years and it'll give me a good return. In fact, I should be able to tell you what that return will be based on what I'm doing. Bear with me just a second. I want to drag in a composite calculator just to give you an idea of how this works, because I'm telling you straight, if you're in this for quick money, big money, and you think it's dead easy, you're wasting your time. Give up. Go get a job in McDonald's. If you're looking at it as a long-term investor, which I am, if I can get £2,000 out of this for the year from a £200 investment, so what you got to remember is that £200 investment is now going to create £2,000 for the year. Now, my interest rate that I'm getting off my Vanguard is approximately around 12% a year. Run it for 10 years because that's what I'm looking at. There you go. That £2,000 without any addition added to it is put 6,500 into a pension pot for doing nothing. Now that's just year 1. Well, what if I kept doing this within that time? Oh, balls. Give me a sec. I should be able to pull that back. There we go. So principal amount is 2,000. 12% would be added to this per year. We're running it for 10 years. There are going to be additional deposits. Now, these deposits will be every month. Now, I work on a 10-month year. Why do I work on 10 months? Very simple. I'm going to be wrong So it's going to write a month off, and I want a holiday. So it's 10 months. So that works out roughly at about 200 quid a month, which it will across the 12 months. So even if I just drop that down to say, well, I'm going to put £150 a month across 12, that allows the buffer starting today, and I calculated, isn't that different? So even if I stopped, I get 6 grand. But if I just continued by putting 150 a month into it, it's now 41,000 over that. For a pension, you need about 200,000 a year to give you some half decent money each month. This is your way to do it. Okay, that's bloody a big chunk of what I need. And if you watch the updates, the end of the month, things like that, I'll show you the Vanguard and you'll see how well this does, because we started building that last year and it has a colossal amount of money in it now. And it's all live. Anyway, guys, just something for you to think about. These are kind of off the cuff videos. They're not thought through or anything like that. Well, I never think any of them through anyway. Everything's on the fly. In other words, I just switch the camera on, grab my coffee, because we all know Scruffy likes a coffee, and off we go. That's it. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.